Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guest today has created over $5 million of equity in multifamily investments in his first 5 years and grown a real estate portfolio to $25 million plus. He's also been a featured author in publications such as Business Insiders, BiggerPockets, and Multifamily Insider. Spencer Cullor is principal at Apartment Investors. Spencer, welcome to Purchase to Profits. It's great to have you on the show.
Thank you for having me. I appreciate it.
Yeah, I'm really looking forward to this. So to start things off, do you want to tell us about your real estate goals right now?
Sure. Our goals are really to continue to grow, to make sure every property is maximizing its value. And then our short-term goals are to get to over 1,000 units.
Nice.
And then long-term, we've got plans to be in the 2,000-3,000 range.
Nice. I like that. That's great. So whereabouts are you right now on your way to getting to that, a couple thousand units?
Sure. We're about 650 units right now. I expect to be close to 1,000 by the end of the year with a couple things that we have currently going on.
Yeah. And what would that unit count hitting that your goal for this year look like in dollar volume wise? Because I'm always interested, because some people focus on number of units they want to acquire. Some people focus on dollar volume. What made you choose the units?
To me, it was just a tangible goal that we could get to. So it was more just a number. I mean, I've never been obsessed with how many units you have. To me, it's always how much the units make, not how many units you have. You can easily get into those, but some of the industry things that kind of brokers put you in different categories when you hit certain levels and things like that. So that our goal has really been to start was to create a retirement income for my father. Then it was to create an income for myself, and so my wife could stay home with our daughter. And then it's to reach these more tangible goals like 1,000 units or to get to this level. And one of the reasons we wanted to get to where we are now was so I could hire a good regional manager, and then we could start replacing ourselves in different areas so I could focus on the things that I really enjoy with the business.
Yeah. And so you had mentioned, you've had some changes in how you operate as you grow. What do you think the most impactful changes that you have made so far that has allowed you to get to where you're at?
Well, getting started, I think one of the most important things for me was getting involved hands-on with the property. So I learned from the ground up. Our first property that we purchased was multifamily. I negotiated it in the guy's kitchen, put the deal together, put the money together, and then I was the maintenance guy, the make-ready guy, the leasing person, took care of the financials, all of that. So I learned it from the nuts and bolts from the ground up. But to me, that helped us really understand how the properties work, how value is created, and then take that as we started bringing in more property managers and maintenance people and things to know exactly, how long should this project take, or how long should a make ready take? How much should it cost? So that it kept the people that work for us now honest.
Yeah, for sure. And would you say that bringing people on your team has allowed you to grow faster? Like, how's that impacted you?
Definitely. The more you replace yourself in different aspects, the easier it is to focus on the things that really make us money. For us, it's acquisitions, it's putting together value add deals, overseeing the construction and a renovation of a property, and then leasing it at a maximum value. Those are the things that really are core to our business. So the more I got out of kind of some of the day-to-day property management things and stuff really helped us to continue to grow, making really good hires on that side that we could trust, that they could bring their ideas to the table too. I'm a big fan of, I don't want to be the smartest person in the room. I want to hire the smartest people in the room in each area that we're focusing on.
Yeah. And as your business continues to grow and you hit those targets you've set for yourself, how do you think your role is going to change in your business as you keep bringing on other people?
Well, one, it'll always be to oversee our core business, which is the multifamily and the operations and the acquisitions. But what it'll allow me to do is focus more on the relationships on the private money side and focus more on the acquisition side, and putting the deals together so that we can grow, we can continue to hire quality people and grow our team there. But also, uh, take care of our investors and make sure that we're hitting the returns that we've laid out and our goals and things there.
Yeah.
But the more we hire quality people and bring them as part of the system, it becomes easier to duplicate that from project to project.
Yeah. And well, like right now, you've got a little over 25 million in assets. Do you have any routines that you do, maybe daily, weekly, monthly, that helps keep you focused in growing that?
Sure. Well, on just the property management side, there's lots of reports and stuff that we get delivered to us automatically through our property management system every Monday. So we're looking at collections, we're looking at occupancy, the things that really matter on a property. We're take and then getting reports back from all of our property managers on exactly what's going on the properties. Plus, we still spend a lot of time traveling and getting on site on a weekly, almost daily basis, that we're going out and making sure that these properties are running, they look the way we want them to. We're not getting deferred maintenance, just checks and balances. There's a lot of
Yeah.
those. But then I am spending a lot of time on the acquisition side and the broker relationships and going to look at properties and analyzing them and then putting together the budgets, and because we have a very specific model we operate under for value add multifamily deals, and so we have to go through a lot of deals before we find one or two that really fit what we do.
Yeah, and you mentioned you're making building relationships with the brokers.
Mhm.
Have For you to continue to grow and get to grow your portfolio, will you have to change those relationships or go after new relationships?
We will as we enter new markets, but in our core markets, we're always reaching out to more people. But we have a core group of brokers and things that I closed two deals with a broker last year that I had known for 5 years, and we looked at lots of different deals, but we didn't actually do one with them till last year, and we did two within the course of about 3 months of each other. So um, a lot of times it's planting that seed and then cultivating it over a long period of time before it finally it grows fruit. So
Yeah, no, for sure. And for yourself, do you wake up every morning and have a checklist of things you need to do? Like you mentioned, those reports. Are you looking at every single report, or do you just look at like an executive summary?
we look at key things
Okay.
within each. I try not to get too in the nuts and bolts on because it takes away from being able to do the things that actually grow the business. But
Yeah.
we do checks and balances, and we spot check different things. Or if there's a project that's these four projects are really stabilized and going really well, but we've got this other one that's in the middle of a big renovation. We're going to spend more time with the project that needs more attention.
Yeah.
And
And,
it
and
kind of depends on where they are in their life cycle with us.
gotcha. And you mentioned, growing the things that grow your business. If somebody's watching right now and maybe they have one property, what would you say are the key factors in growing a multifamily business?
Well, we started, and everybody starts with one property, and that's to me the key, and why we've kind of grown a little slower than some others that I've seen grow faster that started around the same time. Is we've wanted to make sure every asset was performing kind of to its peak, and we use that asset on maybe a value add refinance to pull money out to go help purchase the next property. So we've really taken it kind of more of a slow, steady approach on, we want to make sure every property is performing well before we go on to do the next. It's not about getting acquisition fees and putting together, 100 different deals. We want 10 deals that are performing really well. And so that's kind of been a key to our growth, and kind of going slow and steady in kind of our Midwestern conservative roots when it comes to running a business.
Yeah.
No, go ahead.
No, I was just going to say that's a good point, because I think some people are so focused on acquiring the next deal, they forget they actually have to manage and have their current
Yes.
holdings perform, right?
Well, that's why I hate talking about unit counts, really, because that's not really what it's about. I know some people out there that own 2,000 units. Their average brings them maybe $50 a unit a month, or something in profit. Some of ours average $200 or $300 a unit in profit. So sometimes a 40 unit property can produce as much profit as a 200 unit property. It really comes down to your net, not your gross.
Yeah, for sure. And I interrupted you before you were going to keep talking about just some other key things to grow your business.
Well, one is making sure that that first project goes well, because then you can use it to fuel. So our first project was a 40 unit multifamily deal. It's in our home market. Staying close to home, I think, is really important when you're first starting out. If you're in California, don't buy a 40 unit property in Kansas City for your first deal. Find something close to you that you can manage. And if things go wrong, you can jump in and change management companies or whatever you need to do without flying halfway across the United States. But what we did on that was, we took $250,000 in investment money to purchase that property. Within 18 months, we were able to do a cash out refi where we pulled out 350. We'd added so much value to the property, and we used that 350 to help roll over into another property, added more investors, and we were able to grow. Then you took the second property, and we did the same thing and duplicated that, and then on a third property, and that's where it really starts to kind of feed itself and grow. And then by the point you get to down the road, you want to sell one of those properties, you can take that whole chunk and move it over to a much bigger property. So it's really making sure on a project by project basis that you do the things that need to be done on that property to maximize its value.
Yeah.
And then using that to fuel the next. You want to build a really strong base from the beginning, not get spread out and worry about things like unit counts or this or that.
Yeah. And would you say that the management side and operations side is just as important, if not more important, than that, renovation, the physical kind of value adds?
Oh, it's totally multifamily. We've done retail, we've done some office and warehouse and things like that. But in multifamily, management is key on these properties. They are living, breathing organisms. They kind of take on a life of their own. And the key to making them all run and operate is management.
Yeah.
If you've got a problem on a property, 9 times out of 10, it's because of management and what's going on with management maintenance on the property.
Yeah.
And that's, to me, 10 times more important than the other things that you do.
Yeah. And I think with some new syndicators getting into the multifamily space, they focus just on like the renovations and the rehabs,
Mm-hmm.
but that operational side, you can do some really neat things, just tightening up the ship that way.
Yeah, well, and these properties are all based on values on what they generate. So you can do all the renovations in the world, but if you don't, and we see this all the time with sellers, they may be renovated an apartment complex and they expect to get this much more value out of it when they go to sell. But if they didn't raise the rents in 10 years, you probably didn't add value. And in fact, with your taxes going up and other things, it's probably gone down in value over time.
Yeah.
And so it's much more important. I mean, obviously you don't want to create big capital expenditures and deferred maintenance on a property, because that snowballs really quickly, and that's how people can really get in trouble if they don't reinvest back into the property and keep it up. But if you don't manage the property well, and you don't focus on the operations and growth of income on the property, then you're not going to get the value add boost that you think you are.
Yeah, no, for sure. Those were some really good tips. So out of all the deals that you've done so far, is there one that stands out as a keystone deal?
Well, I would say, two of our first properties that we did, they couldn't be more different, even though one was a 40 unit and one was a 72 unit deal. The first one, was in a really good area. It had some deferred maintenance and it had rents that hadn't been raised in a long time. And we were able to cure those relatively quickly. You might think that would translate to every property really easy. Well, what we found out is all the things we didn't know on the second one when we came in. It was a 72 unit, maybe not quite in as good an area, and it took us much longer to turn around that deal.
Yeah.
Focusing on your value in these and your stability in these properties are based on the tenants. It's not based on the physical outside of the property, or anything. It's based on your tenant base that you have. And those are what are going to give you the biggest bang for your buck. So you can go in, like the second deal, what we learned from it was just how important the area was. Even though we did turn that project around and it's been one of our most successful projects, it took much longer, much more energy, much more resources that needed to go into it. But those two projects really taught us so much about the business and about what it takes to make it with these properties and add value. They were really the key benchmarks for us moving forward on every other project.
Yeah.
But like the second deal we did, one of the things we found out, 2 years in, we started asking people, what were their biggest, why were they leaving, or what could we add to it and we found out, well, it was mostly a property of 2-bedroom apartments. Well, what do you have in 2 bedrooms? A lot more families. And they didn't like going down to the laundry room. And that's where we were losing some tenants and stuff to our competition there. So one of the things we always do in our projects is continue to look at what's going on in the market and what we can do to continue to upgrade that project. So 2 years in, we figured out how to put in washer and dryers in those units. And by doing that alone, we were able to raise the rents about another $150 a month and add almost $2 million in value to this project.
Yeah.
But it was, sometimes you think you're maxed out and then you come up with another thing listening to your tenants, and it allows you to add way more value to the
Oh
project.
no, I'm so glad you brought that up because just listening to your customer is one of the most important things, and they were basically telling you what they wanted, right?
Yes, and it was up to us then to figure out how to do it.
Yeah.
Not all projects will let you do that, or all properties, but this one we came up with an innovative solution to vent the washer and dryers, and it was close to a water and electrical box and drains. So we figured out how to do it, and then figured out how to put the extra money in to get that back. But it took a lot of listening to our customer base. It took figuring out from a physical standpoint how we were going to do this, and then figuring out how to finance it.
Oh, for sure. And you had mentioned, the location wasn't as good as that first property with this, the 72 unit. What was it? Was it like a C plus location? Was it B minus? Like what?
Yeah, probably somewhere in that mix.
Okay.
I'd call it more C plus
Okay.
area. The other one was probably in a real solid B area, which was really improving at the
Yeah.
time. It ended up being kind of a little hidden gem that we found. I mean, I don't think we didn't understand how good of an investment that was going to be when we took it on. To be honest, we
Yeah.
had goals of this, and then once we got there, we figured out how we could go way past that.
Yeah.
But a lot of it has to do too with the market improving in an area. So I'm very big on making sure that we find projects that are in good areas. I mean, you can go fix up a rundown D class property in a D area, but you're still in a D area. Um, you can go to an appreciating market and buy a crappy property, and you're still maybe in a crappy submarket of that. It doesn't mean every market is local,
Yeah.
and you have to really focus on that. And we've really found that if we focus on the market first, the asset second, it's much more important to us.
Yeah, no, that's a really good point. So, have you changed? So, how would your underwriting change based on your experiences with that 72 unit property? Because you mentioned it took a lot longer to turn around
Hmm.
because of the area. How do you approach underwriting a property in a C plus area, knowing what you know now?
Sure. Well, one thing we do is we definitely factor in that we're going to have a higher vacancy at first. Most projects, when you take them over, when you change management and something, you might have a dip of 10%. But on the rockier the area, it may be bigger than
Yeah,
that. And so you have to plan on that. You also have to give yourself more time if you have a property that maybe has a bad reputation. Reputation sometimes can take a couple years to do, and you usually have to do something more dramatic to the property, change the color, change the look. You've got to make it feel like a different property than it was to get past that. Um, and then just focusing on the local area that you're in, and is the city going to be on board with what you're doing? Is the police department going to be on board with what you're doing? If they're going to fight you with it, you probably want to go someplace else. If they're going to get on board, they can be your best friend and help you really clean up a property really quickly.
oh, for sure. And I'm glad you mentioned that. So, do you make a point of meeting with the local police and all that stuff when you're acquiring a property, let's say a C
That
plus?
Yeah, definitely. The more local contacts you have there, the better.
Yeah,
Um, you want to know, if you're, for instance, we went into a project last year that had a really bad reputation. It had This area had become a bad area, but when you look at the area around it, everything had the benchmarks of a really nice area. It just what we had to get into and was what's the real problems with this area? Is it this property, or is it the area in as a whole? And so that's some of the decisions you have to make when you're going into it. If it's this property, we can make a big impact on that. If you're trying to bring up the whole area, you're going to struggle.
yeah,
um, and then the other thing, at the lower the class of property that you take on, the more you're going to have to budget for capital expenditures, upgrades to the apartment turns. You're going to have a lot more flooring costs. You're going to have a lot more painting. You're going to have a lot more drywall work when you're fixing holes in the walls, things like that.
yeah.
Um, and that's all dependent on your tenant base.
For sure. And what tips do you have to somebody who's maybe acquired that C plus property with some issues, and how do you change over that tenant profile?
The best thing you can do is upgrade the property. So the first thing that people care about, or first thing is you got to figure out, is it already in a good enough exterior look to attract the kind of tenants to walk through the door? And if
Yeah,
it's not, then you've got to focus on that exterior look to make it inviting, safe for those people, lighting, gates, whatever you need to do to make people feel safe at a property. That's number one. Then if the outside is already inviting and maybe it's just been management that's done it, you've got to look at, when you come in, you've got to get rid of issues. If you've got tenants that are causing problems, that are maybe dangerous, that you can't have those people around the tenants that you want to bring in. So you may have to empty out some of the property, and then you want to make sure that the apartments that you show those people look really nice and look exactly like the one they're going to move into. Don't want to do bait and switch. You show them a nice model and then they move into this one over here that's not so nice at all. You may have 10 down units but nobody's ever going to see those until they're done. And you just have to look at it from your ideal tenant's perspective. On if you want to attract this person, what are they going to look at the property as? So one, you've got to make it inviting for them to come into. You've got to have a friendly staff there that's going to go the extra mile and take care of somebody screaming that they haven't had maintenance requests done in 2 years, because that's just what you find in a C-class property that has had deferred maintenance, and that's probably why you're buying it for the price you are, is because it's had some issues.
Yeah.
And then you've got to go in and fix those issues right away. So you take care of your current tenant base, and then make sure that you've done the upgrades that are required to get that new tenant base in.
Yeah. Oh, that's some great information right there. So if, right now you're on your way to building your business, you've got a lot of experience. So if somebody's looking to, find out more about you and your projects, where can they get in touch?
Sure. We'd love to hear from anybody and see if there's any way we can help them in their business building. They can reach us at apartmentvestors.com. On there, we've got contact forms. We've got hundreds of free articles that we've written, from the real nuts and bolts of here's exactly what we did with this issue, or here's what we did when this came up, which you will find out as you go in this business, all the crazy things you run into. I think I could write a book on all the crazy property management experiences we've had.
Yeah.
And anybody that's been in this business for a long time will have. So, but we would love to talk to them and find out how we can help them with their business as well.
Oh, that's great. Well, Spencer, just want to say thanks so much for taking the time and sharing your success with us today.
All right. Thank you very much.
Yeah, no, you're very welcome. And to you, our viewers, I wish you well in your journey from purchase to profits. See you next time.